Bradstreet's D&B Risk Analytics webinar. I hope you're having a wonderful Friday today. We're really excited to be here with you today. My name is Abby Ludi. I am the marketing leader for our third-party risk and compliance business, and I will be your moderator today. Just a couple of housekeeping items before we begin. We are recording this session. Any participants will be replaced, all participants will be placed on mute. If you would like to ask a question, go ahead and enter it into the Q&A box. We'll have some time for Q&A after our demo today. We also have a few polling questions during the webinar, and we invite you to participate in those as well. Again, feel free to enter your questions at any time in the Q&A box, and we'll answer those toward the end of the webinar. So with that, I'd like to just walk you through the agenda really quickly. So before I begin, I wanted to introduce Hemanth Sethi, today's speaker. He's our head of products, and he's leading this product strategy and development focused on Dun & Bradstreet's supply chain solutions, and he's focused on compliance and sustainability as well. Hemanth comes to us with an MBA from the Booth School of Business in Chicago and a BS in computer science from the University of Mysore in India. So we welcome Hemanth to today's session, and I will now go over the agenda with you. So we're going to cover quite a few things today. The first is just the overarching landscape of third-party risk, what's happening there today. We're also going to explore AI-driven data for effective risk mitigation, 3 components for managing supplier risk effectively, and then finally we'll actually get into a live demo of our D&B risk analytics solution. Before we get started with the presentation, we just wanted to put a quick poll out there and just see which of the following you're most focused on in 2021. So you should see a poll popping up on your screen. Just select whatever button is most relevant for you. Wonderful, thank you. It looks like we've got some answers rolling in, and clearly managing risk is the biggest focus area for 2021, and that's not surprising at all. I see managing business continuity and operational expenses as well as automation are coming in at kind of a close second, but it's clear that a lot of folks on the call today are really interested in managing risk, so we'll make sure to focus on that during today's webinar. So with that, I will hand it over to Hemanth.
Hello, everyone. Welcome, and thank you for joining us today. So I wanted to kind of start off this presentation with talking about some of the recent events. Everybody's aware of the Suez Canal incident that happened a week or so ago, and it has caused a major disruption in the supply chain. Dun & Bradstreet, in partnership with E2Open, did an assessment of the supply chain data and identified that this one single event has caused close to $54 billion in disruption that will be felt for months to come. This kind of disruption, is a black swan event that seems to be happening more and more in our supply chains, the way we are networked, the way we are connected, and this is not uncommon. In addition, because of the pandemic, 94% of our Fortune 500 companies have also, in fact, had some level of disruption due to the pandemic as well. So, managing this kind of risk starts to become critical, and having the right sets of tools, right sets of capabilities and data to solve and automate and simplify your risk program starts to become very critical and starts to become very important. So there's a lot of pressures procurement and compliance professionals have to deal with, especially around their risk management programs. The first is there's skyrocketing costs of automation and manual processes that are in place right now. Many of the customers we speak with don't tend to have a fairly automated process. There's still a significant amount of labor-intensive activities, outsourcing activities, and offshoring activities that happen just to do basic data management and basic cleansing of data, as well as managing the risk of their third parties and actively tracking information about their third parties. These costs are just significantly increasing because historically the risk programs tended to be, the responsibilities of the procurement and compliance tended to be about onboarding. But now there's a lot more requirements that are coming in, and there's a lot more emphasis on digital transformation to drive growth and drive innovation. And this requires a level of sophistication and maturity that many of our customers don't have. In addition to that, there's a lot more unknowns about your supply chain, about who the actors are, good actors, bad actors, and whether you're doing business with ethical practices or ethical people, and whether people are following best practices within their supply chain. And if you're not compliant with the rules and regulations that are in the industry, you could have severe penalties around it as well. And in fact, the regulations keep changing very frequently. Even now, as with the new Biden administration that has just come into the United States, they're enacting a lot of new regulations that companies have to start to adhere to, and they have to transform their risk programs all over again. And then finally, our supply chains are complex. We have tier 2 suppliers, tier 3 suppliers, and that level of complexity starts to become, exponentially harder to manage if your risk is downstream and you don't have that level of visibility. In addition to that, customers are being asked to drive additional level of insights around cybersecurity, sustainability, etc., that traditionally would not fall into a risk management program, but more and more customers are looking for a much more holistic view of risk about a third party, about a supplier that they're doing business with. And all of these are putting a lot more pressure onto the procurement organization, the risk organization, to drive efficiencies and drive automation so that these programs can be managed effectively and you stay compliant with the rules and regulations. In some of the recent surveys that we've seen, the trend also holds true based on the survey responses. So the first one shows you that 60% of the CPOs that have been surveyed by a Deloitte survey, the risk program has increased over the last year. And that's not uncommon. That's what we're seeing with a lot of our customers as well. And the audience poll just showed that same sentiment as well. In addition to that, customers who are not compliant with risk programs are significantly fined. We've seen the largest amount of fines that the FCPA has done through the Department of Justice in 2020 of $6.4 billion. And this is only going to increase as customers and companies don't have a strong compliance program and not set up a strong compliance program to mitigate some of the compliance issues that they need to adhere to. A recent survey that Dun & Bradstreet did also identified that monitoring of their suppliers and the risk of their suppliers is the biggest challenge, because once you identify an initial risk, you have to constantly monitor them for risk changes, information changes about those entities. And that is a significant challenge that many companies don't have systems and processes set up for those kinds of expectations. And then finally, due to the pandemic, the biggest focus in 2021 will be around risk management programs, where now there's a new type of risk that is factored in. People are working more remote. So how do you start managing business and managing your third parties when we are now spread out and much more distributed in a functional nature? And that is also going to be important. And we are starting to see some of that activity as well drive as far as 2021 has kicked off this year. But these risks are everywhere, right? There are some visible risks that are table stakes. People know about them. You know who your suppliers are. You know who your customers are. But that's about the surface. There's a lot of information. If you don't dig deeper and go beyond the visibility barriers, it'll be impossible or hard to find the additional hidden risks that you may not know. So these things include, what is the risk of your supply chain? Your tier 2 suppliers. Are there is your supplier or third party involved? Is part of a complex corporate hierarchy that you may unknowingly be doing business with? Are they, ethically sourced? Do they have any sanctions or watch list on the CEOs of the companies that you're dealing with? Are they sustainable? Are they, mining? Are they sourcing from the right mines and right factories in Asia, etc.? All of those kinds of risks starts to bear on you, and it essentially, at the end of the day, it will be kind of your reputation on the line. You will be the ones getting fined, or your brand reputation is going to hurt if you don't manage your third party's risks in multitude of these areas. But you need to get beyond this visibility layer and visibility barrier. And without knowing all these hidden risks that lie underneath the surface, it will be impossible, almost hard, to identify or build a true risk management program. So I want to quickly understand what are the biggest challenges you're facing. And if you could answer this poll, we'll give it a minute or two. Awesome. Thank you, everyone. So I see the biggest challenge is inconsistent data and insights. And then the second biggest is labor-intensive processes. Those two seem to be the number 1 and 2 priorities for this audience. And that's not uncommon. So I'm glad, it kind of bears fruit with some of the challenges that we have been seeing as well. And this is where Dun & Bradstreet can potentially help. So the next thing I wanted to kind of talk about is how Dun & Bradstreet can help here. So the main thing Dun & Bradstreet offers is the DUNS entity. Before I start into kind of supply programs and risk programs and the solution itself, I want to talk about our core business identifier and business entity. Dun & Bradstreet has the largest number of entities worldwide, and we have essentially identified a fingerprint on this entity using our DUNS number. This DUNS number is almost like the unique, social security number or tax identifier number, and it is a global entity, global number that you can use to fingerprint a particular entity. And using that DUNS number, you can now start to unlock a significant amount of information about that entity. That includes, who the company is, their firmographic information, hierarchy and linkage, beneficial ownership, etc. And on top of that, you can also use this DUNS number to drive insights, analytics, and predictive scores to better manage your risk program. So this is the code, this is the foundation for how we believe a risk management program should be done. And this allows, kind of identifying new growth opportunities, identifying the entity, managing risk, managing fraud, managing compliance, and gives you a deeper level of insights into your entity as well. This DUNS entity and the live business identity is distributed throughout the data cloud. There are multiple ways that customers can get access to this information, but it's all powered by the data cloud that Dun & Bradstreet has innovated over the last couple of years. Right now, we have close to actually 420 million business records within our database worldwide. And it is the single largest source of information about business entities in the globe. In addition to that, pretty much 90% of Fortune 500 companies rely on this DUNS number and rely on this live business entities to manage their risk programs. Additionally, we have some new assets and core assets that have been built on top of this business entity. Things like the beneficial ownership that gives you who the people are, who the shareholders are of a company, and who their associated companies or people associated with that entity that you can start to understand from a risk program and a compliance program. On top of that, we also get the linkage information, the parent hierarchy, the corporate hierarchy, etc. In addition to that, we are also innovating in new areas of things like network intelligence, where now you can start to say whether an individual is has ownership on multiple organizations within the DUNS cloud. So this gives you a level of insight that historically has not been able to do. On top of that, the data is actively being updated on a real-time basis. We have multitude of sources internationally, globally, locally, where we get data to feed this data cloud. But then the updates are happening on a real-time basis, and right now we're tracking close to 2 billion updates on a near-annual basis. So this gives you the freshness and the real-time nature of information about a company that nobody else can provide. So what does this allow you to do? So from a risk management program perspective, using that foundation, it allows you to start building up a true risk management program. You kind of, first of all, identify the entity, and then based on that, you're able to screen, you're able to monitor, you're able to use predictive intelligence on an entity and start to proactively manage the risk of your entities rather than being reactive based on incidents or events that have happened around that company. In addition to that, using the entity information, you can kind of get a level of automation that allows you a level of efficiencies to understand, source, quantify, and qualify these entities from a risk management perspective. And this should allow you to drive costs down without needing the extensive labor and extensive manual reviews on said information. And based on that information, using our AI capabilities and our intelligence and analytics, you're able to drive significant level of business insights on those entities as well. So this leads into the solution that we are going to talk about today, Risk Kinetics. So we launched Risk Kinetics in January in the US and just launched it in the United Kingdom in April. So what Risk Kinetics does is allow us to manage your risk program and allow us to screen and mitigate risk of your third parties in a real-time basis. It gives you essentially a one-stop shop of information about a company. And it also is powered by the D&B cloud that is driven off of our AI-driven global insights and data. It has a lot of information that Risk Kinetics can provide, and based on your risk profile and your risk assessment methodology, you may choose to decide what level of due diligence or what level of risk you want to monitor on that. This is just the start of the journey. We have a long roadmap ahead of us over the next 12, 18 months, building up a true risk assessment process and risk assessment capability and integrating it into your life cycle. But we wanted to start off with managing supplier risk and understanding the level of insights that D&B can provide on the companies that you do business with. The two primary use cases we are going to be addressing within Risk Kinetics are supply intelligence and compliance intelligence. We launched the product with supplier intelligence, and what that gives you is intelligent workflows that allows you to kind of understand an entity, understand your portfolio, manage risk and see risk at an aggregate level on your about your portfolio. You're able to screen and monitor information about those companies, and it gives you a level of portfolio risk management that you can start to segment your portfolio based on how you want to manage your risk. By the next 6 to 12 months, we'll be adding in much more focus on compliance intelligence capabilities. That includes due diligence program, onboarding, regulatory intelligence, network intelligence, etc., and layering in a level of workflow and automation that can be integrated into your systems as well. Now, this should allow you to kind of manage risk, drive operational efficiencies, give you a level of visibility into your portfolio and into the third parties that you do business, all in the while staying compliant with the regulatory environment and regulatory requirements that have been imposed on all of us. So the two primary kind of scores that I wanted to kind of touch upon in the demo is our SCR score, Supplier Evaluation Rating, and SSI score, Supplier Stability Indicator. What these two scores give you is a level of predictive lift to identify whether a company is going to be in business in the next 12 months or the next 3 months. So it gives you a short-term and a long-term predictive view of a company potentially staying in business. And this is based on proprietary data that we have collected about these companies and built a predictive model, an AI model, to start to derive intelligence based on historical data that we have on these companies to give you a level of insight about how you can proactively manage your risk of these companies. Okay, let's switch over to the demo. Okay, so what you see here is the main landing page for Risk Kinetics. So the main page here shows you a dashboard view of your portfolio, and it gives you essentially a view of how to, it kind of highlights the key risk flags and risk indicators about your portfolio and starts to kind of surface some intelligence about the companies that are in your portfolio and that the company that you're doing business with. On the left, you see an overall scorecard that we've calculated based on some DNB elements and DNB attributes, and it gives you essentially a high-level score about a company. And as you can see, in my portfolio, I have about 1,700 entities, and there's already a quick indicator telling me 217 of those entities are high risk, and those are the companies that you need to look at, right? You can click on any of these and drill down into the specific details. In addition to that, on the right, based on your portfolio, you can also see where are the top 10 riskiest entities of the within your portfolio as well. All of these can be segmented based on custom tags that you've been able to create. So each of these are segmented by basically the entire portfolio, but you could essentially go around and filter. I just want to see my strategic suppliers, for example, and that gives you, okay, I have 2 strategic suppliers, and they both look good. So you can do this for any of the widgets on this dashboard as well. Okay. And in this top riskiest entities, as you can see, it identifies the top entities based on the 2 primary scores that I mentioned earlier, SSI and SCR. And you can click on any of these entities and get like that 360-degree view of the information about that company as well. As you scroll down, there's more insights that can be gained here. So this widget shows you a distribution of your portfolio by SSI and SCR as well. And it gives you the number of entities that gives you within your portfolio that has a risk profile on them. And then on the right, it gives you all the entities that have any kind of public filings or special events associated with those entities. So as an example, I have 461 legal events on all my entities within my portfolio, and there's 293 suits and 168 judgments within that entity. And you can do the same thing with financial events or special events and government events as well. Okay. As you continue down, there's 2 additional scores that we offer, which is the PAYDEX and the failure score. And you can view your portfolio by that distribution as well. And then finally, a view of your portfolio based on where you have risk both on the SSI and SCR. And this gives you essentially the riskiest of the risky entities that you need to be looking at. And finally, at the bottom is the workflow status. So I'll touch upon this a little later, but this is where we have initiated a number of entities for screening. This gives you where your entities are in that screening life cycle within the portfolio. So as you can see at a glance, you're getting via this dashboard a significant amount of information of where you need to drill down within your portfolio. And all this information is live, is monitored real time. And the minute you come to this dashboard, you're basically getting the latest information about this company without having to, essentially do any kind of manual work to aggregate or collect this information. So the first thing I want to do is, potentially search for a company, right? Whether it's a company that's already in my portfolio, a company that I need to, do business with or add to my portfolio. So I can, search for, let's start with something simple like Apple, right? Everybody does business with Apple. So Apple is, it looks like this is already in my portfolio. So somebody within my organization has already added Apple into, the portfolio of entities that we do business with. But in addition to that, I can also see additional, surface results that are surfacing from the data cloud, from the 420 million entities that we currently have within the global universe. I can, this is a simple, quick search, but I can always go into kind of the advanced search process and do, if I have a quick lookup about the DUNS number, the third-party ID, which is, your internal supplier IDs, or national IDs, which is like the tax identifier or local regional identifiers about those entities. And if you have those numbers, you can use that here as a quick lookup. Alternatively, you can use the search criteria to do a fairly advanced search process using a lot of qualification and search criteria, including industry classification like SIC, country, region, location of a company, company characteristics, the size of the company, the sales of the company, etc., and if it's a diverse company as well. So I'm just going to kind of search Apple here as an example and see the search results. So as you can see, the companies in my portfolio show up on the top. So Apple is already in my portfolio, but that shows up right on the top. But I can also navigate down and see other companies that other results that have been surfaced via the data cloud. I can do some additional filtering on the left to focus the search, or I can add in additional search criteria as well. Okay. I'm just going to click on Apple because it's already in my portfolio and show you the level of insight we can provide on this company. So once you click on Apple, this gives you that 360-degree view of the company, and it provides you pretty much all the information we have about this company from a supplier risk perspective. Gives you the company information on the top on the bar here. It gives you some firmographic information about the company, location, website, ticker symbol, etc. The two primary predictor scores, as I mentioned earlier, corporate hierarchy, public filings, etc. And as you drill down, you can see, whether there's a small business, diverse business, etc. If there's any suits, liens, judgments, all of that. So it gives you a pretty good snapshot about the company. Additionally, there's custom fields that you've set up. You can provide your own information to get your own custom information within this profile. And if we have news about this company, it'll also show you some additional news content on this company. So you can always go down to the left and drill down into specific details. So, kind of go to the company overview. If it's a public company, there's a ton of information that provides you about the public nature of the company, principal, shareholders, registration information, etc. Predictive scores, not just SSI and SCR, but all the predictive scores that we offer, DNB ratings, viability ratings, etc. Financial characteristics, sales, cash flows, balance sheets, all of that information. And if there's public filings, so a company like Apple is a fairly large company, so they tend to have a lot of public filings. As you can see, there's a ton of public filing information here, and you can click on any one of them and go to much more details about each of those public filings that have been filed in the various courts and jurisdictions. Okay, corporate linkage. So Apple is a fairly large company, so it'll show you the full corporate linkage within this view. This can take a couple of seconds to load. Yes, so you can see this is Apple's fairly large public filing. Corporate linkage about the company. Okay. If it's a diverse company, you'll have a lot more diverse indicators. In this case, Apple is not, so you're not going to see a lot of that. But if you have diverse flags and diverse indicators, you'll get a lot more information about them. And then finally, the scorecard. So every month we calculate an automatic scorecard snapshot about the company based on DNB information, and gives you an overall scorecard risk about this company. So, I added this entity into my portfolio in October, and, it's been calculating this every month to see an overall trend of how this scorecard is being calculated. And the last piece of information I wanted to show here is the beneficial ownership. So this is the ownership structure of of the company of Apple. It gives you the shareholders' principles, and also if there are other companies that own this, and this can get fairly large. So, as an example, wanted to show you an example of Toyota, which is a fairly large company. It has all the same kinds of information, but its beneficial ownership is extremely complex, and this is the information that we collect, and this is something that nobody can offer right now. So it's a fairly complex beneficial owner graph. So it's up to you as a customer to if Toyota is one of your suppliers, to figure out how to manage a risk program based on this complex hierarchy. And you can also see this in a grid view, and this is there's 191 shareholders at this beneficial ownership level. Okay, so as you can see, there's a ton of information here from overall risk profile, and it based on this information, you're able to essentially figure out where do you need to dig deeper on, right? Which set of information is meaningful for you, how does it map to your risk policy, and if it's predictive scores, or if it's beneficial ownership, or if it's financial indicators, all of that kind of in this 360 view is can be provided. As I mentioned, this information is live in real time, but sometimes you want to be notified about a certain set of information. So as changes happen, as your score changes from 1 to an 8 or whatever, you may want to be notified about those risk profiles, and then you can use your the alert function and manage a risk alert profile, and you can configure different alert profiles to suit your risk specific needs. So I can go to a particular risk profile and say my SAR score increased by 2 points, then I would want to be notified. Or if there's a public filings, I want to be notified, right? So this is an example of how you want to be able to configure specific risk profiles to meet your risk policy within your portfolio. Okay. Then the last piece I want to kind of touch upon here is the screening function. So as you go to, I can go to my all third parties here and see my entire portfolio, and you can slice and dice, based on, whether it's based on the tags that you have, or based on SIC. In addition to, one additional thing I forgot to mention is you can actually add non-DUNS entities. So from DUNS entities are typically legal entities within the filings, but because of the nature of the business we operate in, many times these are not necessarily legal entities. So it could be individuals, it could be sole proprietors. So you have the opportunity to add a non-DUNS entity here, and we would essentially provide your own information about that company, or you could send that for kind of due diligence or screening processes as well. Okay. In addition to that, let's kind of go back to Toyota, for example. So I kind of mentioned about all the information we have on this company, but one thing I wanted to kind of mention here now is about screening. So what we do is when you add an entity to your portfolio, you automatically send the name of the company and any trade styles of this company to OFAC sanction screening, right? So in this example, I've sent Toyota Motors, and I actually see there's two potential hits of Toyota. This looks like it's a false positive, so I'm just going to mark this as a false positive. It's not this, it's a different entity. Okay, but the other one looks like it is, it might be the same company. So I look at Toyota Motors, and I can actually, get information about this company and look at their watch list, and if there's any sanctions or OFACs on this company. So in this case, I have a certain set of, watch lists that I currently are being provided, and it's up to me as a risk officer to manage the risk profile of Toyota. Now, Toyota is a very large company, so it's something that you got to decide whether you want to do business with Toyota based on the information provided here. But right now, we're only seeing risk on, we're only seeing the screening results on the company name itself. But what if I want to do a full beneficial ownership and principals and shareholders? So that's when I can initiate an enhanced screening. And in this example, I've not initiated an enhanced screening process. In the interest of time, I'm just going to go to an existing company that I've already done an enhanced screening, LinkedIn Corporation, for example. Okay, so LinkedIn is part of Microsoft, and so I can see, in this in the OFAC screen, I don't have any sanctions for LinkedIn Corporation. But if I go to the workflow, I see 2 workflows kicked off for LinkedIn. I can go to any one of those workflows and essentially look at a fairly detailed result about the screening subject. So let me kind of step back to the steps before, how do you set up the workflow? So when you initiate a screening on a workflow, you're presented with a simple questionnaire about what level of screening do you need to do, an enhanced RPS and an enhanced RPS plus. The difference between these two is primarily driven off of the beneficial ownership. So if you want to screen the beneficial ownership as well, beneficial owners, you need to do an enhanced RPS plus. Okay, because the challenge is beneficial ownership can get fairly long and fairly complex. So you may not necessarily want to do all the beneficial owners depending on your risk policy. But in this scenario, we've screened the beneficial owners, and the system has automatically identified all the principal shareholders, upward linkage, and beneficial owners within this list. So you can see this list gets pretty long. And if it's a fairly complex organization, this can get much longer. I've seen companies that have close to 300, 400 names that needs to be sent to screen. So, but the system automatically does this. But if you also don't see a particular name, you can use this button here that's disabled because we've already initiated the screen. But you can add your own trade style or principal or beneficial owner if you don't see a particular name that should be associated with LinkedIn in this example. So finally, you get to the adjudication step. And here is if an entity is already, if there's no matches found, we automatically adjudicate that entity or adjudicate that name. But if there are hits, you will see the top hits show up on the top. And it's up to the individual user, to the compliance analyst, to go through the names and then look at the risk profile. So obviously Microsoft shows up because Microsoft owns LinkedIn. And you can see there's 2 entities that we've already marked false positive, but then you go to Microsoft, but there's 240 risk events. So the system does a good job to surface all the events in one place. So now you have a single location to manage all these events. In the next iterations of this solution, we're going to do a lot more automation about this. How can we significantly reduce this 240 to drive efficiencies in the process? But for now, the user has to go through these results and look for any material events in the type of event, whether it's a sanctioned watch list type of event, if there's any material adverse media that may be important to this company, or if this company is owned by any kind of state-owned enterprises. And the compliance analyst, based on the company's policy, will have to determine what level of risk they want to associate with this company, and if they want to continue to do business with this entity, right? So this is the kind of thing we're talking about. Is it gives you that 360 level view of information about the company, and it provides you a way to the system automatically does a lot of automation for you to manage your portfolio, manage your risk profile, alert you of changes, and also significantly streamlines your compliance process to do this due diligence program as well. Okay. And then finally, the last piece is on the analysis tab. So this gives you a way to essentially see some out-of-the-box reports that we have on the system. So things like diversity reports. So identify all the companies that are diverse within my portfolio. What kind of diverse entity it is, whether it's a small business, certified, woman-owned, minority, etc. Right? Then there's risk reports. There's reports required for rescreening. So there's some standard reports that we offer, but you have a way to create custom reports as well and get a custom CSV extract based on what you're looking for. So if I want the corporate linkage and I want the depth added, I can basically go into my the various attributes within the system and identify which tags I want this report to be, extracted on a periodic basis. The demo tag, for example. And so you can do this and set up essentially a custom extract based on the information that you're looking for in the system, and then you can schedule this report on a periodic basis. So this is the kind of data information that can be provided for you in an automated manner. Okay, so this was really a quick demo to kind of show you some of the key capabilities of the platform. We can definitely do a deep dive. Please reach out to to your account managers, put on Bradstreet, and we can do a deep dive on this platform and see how this can kind of meet your specific needs within your organization. Going to switch back to the final slide and then open up for questions.
Wonderful. Thank you, everyone. Thank you, Hemanth, for going through that. For all of those folks that said that they were interested in learning more, we will be reaching out to you. Just before we dive into the Q&A, I wanted to remind everyone that we are recording the presentation and that we will send you a copy of the slides and the recording as well. It looks like we've got quite a few questions coming in. I'll start with one that came in around diversity data. Do we have diversity data available for all companies, and is our diversity data going to be made available outside the US?
So we have diversity data on mostly US companies, but we have the largest coverage of diverse companies in among all our competitors as well. The data is available globally. We are trying to expand coverage internationally. We do have some coverage of diverse entities within Europe, specifically on the small business and women-owned business, and we're actively looking to identify other diverse categories internationally as well.
Perfect, thank you. Another question came in that says, do you typically see this solution implemented by clients as a standalone tool or integrated into a procurement or ERM system?
So we are not yet fully integratable into an ERM system outside of the batch file and extracts that you can do through the platform right now. But our expectation is that over the next 6 to 12 months, we will have those integration connectors built in and integrate into your existing lifecycle. So we don't anticipate this to be a standalone tool at all. We want this to be integrated into your existing lifecycle, use this as a way to do the expansion, do the enhancements on the data side, and use our configurable workflows that we will be as part of the roadmap over the next 12 months to integrate it into your existing ERP or ERM systems.
Thank you. Our next question is about the cyber risk rating. Is the cyber risk rating available? If not, when will it be available?
That is planned in the roadmap. We are tentatively targeting before the end of the year to be available in Risk Kinetics. It is available via batch right now. It is planned to be added into our APIs. So you do have access to it through other means, but it'll be we're looking at it before the end of the year to have it in Risk Kinetics.
Great, thank you. We also have a question about our data. How do we ensure that our data is up to date? For example, the active status of businesses, ownerships, and directorships?
So the data right now coming into Risk Kinetics is always up to date based on the information that we have. So if by any means our information is delayed or a little older than expected, we do offer investigation services and inquiry services that will be integrated with Risk Kinetics. Actually, in the next next 2-3 months, we'll actually have our first investigation process where you can kick off an investigation of an entity to make sure that we identify or we do our research on an entity through the local markets if the data looks stale or old. So, but based on the information we have, the data on the Kinetics will always be the latest information that is there.
Wonderful, thank you. There are a couple questions about screening from some customers who are using our compliance tool DNB Onboard. The questions are regarding whether the screening functionality in DNB Risk Analytics is comparable to that in Onboard. And a couple examples of specific questions are, does DNB Risk Analytics screening check against various UN and EU watch lists? A second related question is, does it help identify politically exposed persons and ultimate beneficial owners who have 25% plus shareholding?
Yeah. So I'll answer the second and the third first. So the second question on the watch list, we do have a number of lists, and so I don't know the specific UN list that you're referring to. Please reach out to us, and we can identify, if we are actively tracking that source or not. But we do offer, it's very comparable watch list sanction screening that to our competitors as well. So we do offer that. And then from a political exposed and adverse media, that's also something we can screen against and do screening on. But if you need any specific details, please reach out to us, and we can get you the specific watch list that we do screen on. Related to onboard, so as of now, onboard is still much more focused on the compliance use case, and Risk Analytics is focused on the risk, on the supply risk and supply management use case. Screening is going to be the bridge for us. Our capability within the UI is still not as comparable to onboard, but that is expectation that over the next 6-12 months we will be adding in additional capabilities to make it much more comparable to how onboard is doing, and in fact achieve a level of automation that onboard does not do right now. We're going to have a lot more advanced capabilities with some of the newer assets and newer capabilities that we have within DNB. So it will actually get better than onboard over the next 6-12 months.
Great, thank you. Another question came in about how to identify which companies have begun green or clean energy initiatives.
So there's a separate work stream happening around our sustainability initiative. DNB is actively innovating within that space. We have created our first version of sustainability or ESG scores to track these kinds of initiatives. We plan to get those analytics and ratings within Risk Analytics by the end of the year. But if it is a new initiative for us. It's an innovation program that we've launched earlier this year. If you're interested to understand more about a sustainability program, please reach out, and we can have one of our specialists within that area discuss that specifically, and would love to have you be one of our pilots as well.
Thank you. Another question came in regarding adding third parties to the portfolio. Can this be done by a mass update, or is it required to add suppliers in one by one?
No, there's a batch functionality. You can upload your entire portfolio. It's in via the admin area. You can upload it, and you can segment. You can even segment it via the batch process. So there's a lot of automation. You can do it through that way as well.
Wonderful, thank you. Could you explain a little more about how the solution can be used to manage global suppliers?
So the information that we are showing on the Risk Kinetics is actually global in nature. It is connected to our data cloud, which connects to 420 or so million entities within our global universe. And you can look up any entity globally and add it into your portfolio. So the expectation is that this is essentially a global native platform. And as we have global information about our entities and our suppliers, you can manage your portfolio on a global basis, and the information that will be available on that is global in nature. Now, there are some nuances that some local markets don't have the level of breadth and depth of information that that they don't provide, or we don't have access to for various privacy and regulatory reasons. So based on information that we are able to collect about those companies, you will see that level of information on the system. But one of the things we're looking to do over the next, again, through the roadmap, is to add a level of information collection where you can kick off workflows or information requests to these suppliers, where you could bridge the gaps for those smaller entities in these local markets.
Great, thank you. Could you talk a little bit about the coverage that we have of our data cloud in the APAC, MEA, and CIS regions?
Okay, I can't give any specifics, but we do have our content team and data team that can give you a fairly detailed breakdown about the entities within the various regions. So again, reach out to us, and then we can get you. But as you can say, we have 420 million entities right now. It's the single largest coverage globally. So I'm sure we can, we'll have a good coverage in those regions. Additionally, if there is an entity that you're looking for and it doesn't exist within our data cloud, our partner network and our investigation processes allow us to do a level of investigation that we can potentially add those entities in a very short order.
Perfect, thank you. One more question came in about the linkage between typical risk management GRC platforms and D&B risk analytics.
Yeah, so there is starting to be a little bit of an overlap. But one thing to note is typically GRC platforms have always been about managing an internal risk profile within an organization. Now they are slowly getting into third-party risk elements, because they're using the same kinds of capabilities to manage third-party and external risk factors. Additionally, they don't have access to the data or insights that we do, right? So our approach is going to be that while we might overlap in terms of certain capabilities and functionalities with certain GRC providers, we are going to be using kind of our information first approach and analytics first approach to risk management. So using our data, using our analytics, and using the various risk segmentations that we can provide, and building it on top of some level of automated workflows and integration into your environment, it could very well complement your existing GRC processes that you have.
Great, thank you. There are a couple questions that came in about pricing. The best way to find out more about pricing is to speak with one of our account managers, who can give you an assessment of how many supplier records you need and what specific functionality you need. In the thank you email, we will be sending out a registration link to the free trial, and that will help get you connected with an account manager if you don't currently have one. One more question came in around how do you pick data sources for privately owned companies for which this information is typically not easily available. So I think that relates back to how do we source private company information in our data cloud.
Correct. Yeah, so it's related to kind of our, we have, tons of private data sources and local markets. So we have a network of our partners around the world who essentially are connected to our data cloud, and they do local sourcing of information, let's say in China or India or Thailand, and they gather information at a local market level. And based on regulatory needs and privacy needs, a bunch of that information gets added into our data cloud. So that's how we source. We have close to 3,000 plus different actual sources of information. Some are automated, some are manual. So there's a whole host of information that we have about that. So if we need more specifics, we can reach out to us and we can provide you some details about our sourcing strategy.
Wonderful, thank you. It looks like those are all of the questions that have come in so far. So thank you so much, Hemanth, and thank you to everyone who joined us today. Again, we will send out a copy of the presentation and the recording to you after the call, and we wish you a pleasant rest of your day and a wonderful weekend.